The OECD has unveiled further proposals that aim to crack down on companies that avoid tax. The Paris-based body says global firms with annual revenues of more than €750 million should report their activities on a country-by-country basis. The idea is to boost transparency and get tax authorities to share information.
The financial crisis was some form of wake-up call that it was time to put an end to what we call tax haven, or to put an end to this tax avoidance. Tax avoidance is legal. As regards to taxation of multinationals, we are now coming up with a plan which has been agreed by 44 countries, all the G20, all the OECD countries, a number of developing countries have joined forces to change the legislation so that we eliminate double taxation to facilitate investment, but that we don't end up with what we call double non-taxation, meaning you put your profit in a place where there is no tax, but there is no activity. That's over.
So don't you want big businesses on board? Because big businesses use this kind of methods to avoid taxes for years. So they could say now to the governments that you can't be pro-growth, pro-investment without being pro-business.
If we want to have the cross-border investments, we'd better fix the system. If we don't fix the system, the countries will take unilateral measures, protectionist measures. And that's why it's the interest of the business that may sound paradoxical, but it's their interest that we fix the system. They need to pay taxes. We've engaged with the business community. They have made 10,000 pages of comments to all the 15 actions we've made. So they've been on board and they understand this. But now they need also to comply with the legislation.
Critics say the OECD's plans will only increase the complexity of global tax rules. The European Network on Debt and Development believes tax scandals such as LuxLeaks will continue.
On the 8th of October, the Secretary General of the OECD will present to the G20 finance ministers the outcome of 2 years of work. These are not reports, these are effective changes of international tax rules that we expect the G20 will endorse. Finance ministers on the 8th of October and then the G20 leaders mid-November in Antalya. The fact that you have 90% of the world economy governments agreeing on a set of measures is something extremely significant.